Ladies and gentlemen of the crypto space, we're live on a Friday, September 20th at 11:36 a.m. The data speaks for itself. The directionality is clear. The structure of the system, which we've discussed over the last years, is clearly consistent with the data saying where the destination is. Path still remains choppy. There's always uncertainties. I always remind everyone the system is in a position to always crack and always crumble and always literally collapse in on itself. But that's irrespective of right now. So there's two ways I like to think. I like to definitely respect the path and the pitfalls and the shit that can go down. But there's broadly two perspectives: the destination, which is quite comforting because it's clear from a personal standpoint. To be very even further clear, the destination is also scary and disappointing. Melt up. Inflation in crypto markets. Inflation is inflation, whether it's in the housing market, consumer prices, or frickin' crypto. If crypto assets are hyperinflating, which is what everyone talks about, like price go up, bull market, it's pricing people out. That means people can no longer afford assets, just like if home prices go up, people can no longer afford homes. So inflation is inflation. So what's important in capital management is at least to respect that, to understand that price go up is not a good thing for the system, society, social cohesiveness, social civility, so on and so forth. It causes a divide between people that have the capital to actually own something at an appreciated price versus people that do not. It prices people out of markets. So just understand that and respect that. And money print to go burr isn't what people think it is. Inflation isn't what people think it is. It's just so important to at least understand the world in which you exist, the terminologies and language that you actually use, the structure of the system that humans have created in which we exist. It's not just a matter of respect, it's also a matter of that's the only way to really find peace and find calm and navigate, be able to actually traverse this insanity, having somewhat of an understanding of what the hell is going on. So the destination, that's one, and then two, that's current, like right now. So right now doesn't tell us much, but right now is exciting. Right now is dopamine. It tells us when something's going up. It's like, oh, cool. Or there's something that we own is price appreciating. And that's the case with gold. Gold is insane right now. This is up, it's very up. So some sovereign out there, as alluded by a variety of social media persons, is selling other types of assets for the currency units needed to purchase gold into higher and higher prices. What we're witnessing from a gold perspective is a restructuring of nation states and how they have constructed and will change that construction of their respective financial markets into the future. This type of price action is expressive of the system reorganizing. And by the system, there's people, and people form government. So everyone's reorganizing, restructuring, and making choices and decisions for how to manage their economies and in turn their populations, because that's the entire point of economics is to manage a population. You know what I'm saying? Okay. So 2619. Oh my. So this is the signal through the noise. This tells you everything you need to know, which means we're going to have inflation, significant inflation. Now, from a regulatory standpoint, from a political standpoint, they want to isolate that inflation. They don't want that inflation in goods and services and consumer staples and food. They don't want that inflation in housing. That's been a PR disaster for the administration. So we'll see what their capacity is to isolate this inflation. And obviously, it makes sense. How do you isolate inflation? The rich get richer, so the rich are just spending as they always spend, and the majority are not. So they create a fear. The majority don't own assets. The majority don't invest. And how they do that? probably have endless conspiratorial conversations about that. But if the majority are not reaping the inflationary benefits of these assets where they now have access to more capital, you're not going to have a significant increase in buying pressure with regard to consumer staples and consumables. So that is probably an administrative agenda, is how to acknowledge and understand that there is going to be significant inflation, and they're going to try and funnel it into an isolated uh, group in society, an isolated market. And the market is obviously going to be of interest to only a small part of society. So that's like crypto. It's a relatively small population, and from a global perspective, so that means that capital, that new capital that is available, will not that will be able to temper its effect on the real economy, consumer prices, so on and so forth. And that's part of the destination. That's the trajectory and path that we're currently on, with the backdrop of everything potentially collapsing along the way, as always. DXY, we're in a constructive position because we're close to what would be considered conditions for significant inflation in crypto markets. We're not there yet. We've been discussing the DXY for years at this point, but you have to look at it probably from the weekly perspective. Yeah, 200, the 200 on the weekly. We're at a critical juncture. This is actually quite a nice perspective, other than the 6 month and the yearly chart. Specifically, I'll draw two circles. And I'll try and keep them in a decent spot. One and two and three. We'll draw three circles. So there's your crypto bull markets. Below the 200 on the weekly is going to present some very weird effects that we know very well in crypto markets as significant price appreciation. Now, it's imperative to understand where that comes from, and that's what we talk about all the time. The depreciating dollar increases foreign currency prices, increases foreign currency purchasing power, more foreign currency on the planet than dollars, therefore much more purchasing power on the planet. And all of that bleeds into anything that is of interest. This is exactly why foreign investment in the United States has been very, uh, you know, uh, net international investment position. That's why the rest of the world owns so much of the US, is because of these monetary policy effects. Cyclical required depreciation of the dollar to maintain the solvency and structural function of foreign nations. And that's where we are. They're in a rock and a hard place, as everyone keeps alluding to. If they continue an elevated interest rate, you got social cohesion breaking down, where real estate is in just a bind. And that's going to change now that they've changed the directionality of interest rates. But at the elevated interest rates, look where it got us: a frozen US domestic real estate market. And the cutting of the rates is going to start to unfreeze it. And we get to see how it unfreezes. We don't know. It's a variety of arguments in multiple directions. Significant inventory will come in the market, but that depends on people actually wanting to move. Maybe social consensus is all right. At a majority, an average level, people are like, all right, things have been weird. We're settling down, and maybe the social trend changes where it's not move and move bigger and move up, so on and so forth. Maybe people just stay put more and are increasingly comfortable. And that's not necessarily a bad thing. So maybe there won't be an inventory glut. Isolated, of course. Real estate's a weird one because there's so many markets. Every jurisdiction is a different market, is going to have very different dynamics that we're able to inspect and observe. So as the dollar comes down and gets to this critical level from a average price standpoint, um, we at least get to be um, vindicated from a crypto market perspective because that's exactly the condition that we've been talking about for years, in which our asset prices start to reinflate, coming off an absolute collapse. From a crypto price perspective, massive collapse 22 and 23 as compared to equity markets. So that is just another key talking point that I could really hone in on with regard to the opportunity only being in the crypto markets. You've never had the collapse in equity markets. It's just straight up and to the right. So where the hell are you getting your cheaper prices? Where are you getting your discounts? There's no freaking discounts anywhere to be seen. It's literally up and to the right compared to so many assets that have bottomed probably in late 22 and have just gone horizontal for the last year and a half, year and 3 quarters. And stuff like that does not occur in equities land. Maybe it isolated, but just not in a way where you get the types of returns or get the types of businesses that you see in the crypto market. So that's why we have made the right choices over the last couple of years in looking at these markets for what's interesting that doesn't exist from an enterprise perspective in traditional equities. So we're finally going to get to see what happens when these relatively novel, relatively innovative, and relatively disintermediated, like you know, cash flow and dividends that come to us, where these opportunities have a chance to be appreciated by a larger and larger population. For it to be appreciated, the populations need to have increased availability of capital. And that is what the falling dollar allows. It's very easy to get caught up in the United States in a microcosm. Oh, the United States. Yeah, great. There's a big world out there. A lot of people, a lot of different currencies, a lot of different cultures, a lot of different investment ideologies and methodologies. And when they start to get capital, when their currency becomes increasingly valuable with increased purchasing power, they're finally going to be able to get a chance to make choices on what is an actual viable business, what is a good business, what is an innovative business. And I think, and many people think, that they're going to find these businesses in the crypto markets quite interesting. Bitcoin's been flirting with 63 all day, finally pushing to 63.79 in the last maybe 10, 15 minutes. We could zoom in and give a little bit of perspective from the Bitcoin side. So we pushed above the 10, the weekly 10. Now, very notable that all of 2024 was a mean regression to the 50, the weekly 50. That's it. All of that, oh, it's failing, it's falling. Literally, it's just a mean regression to the 50 SMA on the weekly chart. It looks kind of boring AF from a moving average standpoint. Now, obviously, levels and like impulse moves and flows that this type of analysis neglects that type of inspection. But I think from a moving average standpoint, things are very constructive. They tell us trends over a long period of time, and the trend obviously with Bitcoin is up and to the right, inversely proportional to relative dollar valuation. So as they finally get the dollar under control and they realize the rest of the world needs to exist for supply chains to exist, for you know hot conflicts not to exist, dollar can't be too expensive because that kind of pisses off the entire planet. Thus the rate cuts. They're trying to devalue the dollar. That's exactly what a rate cut is. And structurally, we're right on time. They're starting to devalue the dollar when the Bitcoin 100, weekly 100 is crossing the weekly 200. Oh my, coming off of literally a mean regression to the 50 on the weekly. That's it. That's the relative tightening. I mean, we're literally at levels that were near all-time high in 2021. This did not occur in 2019. We were significantly lower, and then we retraced all the way into March of 2020. It's a completely different structural setup in 2024 compared to 2020. And though it's actually quite stark, like, oh shit. That's what's going on. So when you see something like this, a good setup in this chart, I always love to remind myself what I said earlier to you guys. It's good if you own it. Most people don't. So this is bad. It's bad for the structure and cohesive fabric of society. If this goes to 150, 200, it means shit is fucked up. It means people are broke. They're not paying their bills. They're struggling. And we're talking about people with families that just aren't financially competent, have gotten ahead of their skis, spend too much, save too little, poor utilization of credit. And those are the people that get hurt the worst when Bitcoin goes to 150 grand, 200 grand. So I love to talk probably more so nowadays about the real reality of a bull market in crypto. As much as obviously I'm going to participate along with all of you that listen to me, it's just imperative to just respect the reality of the situation as it pertains to the majority. Because we do, as much as we do stuff that's unique, we do live and exist with the majority in the society. Just important. Curve, not too much constructive other than not down. But that is an important observation. Um, where are we from potentially technically supported upside? We're flirting with the 10 on the weekly. So we did break out a couple weeks ago, back in August, and what we what we need is not here yet. So it's 10 resistance on the 10 on the weekly. So it's a 10. So it's not like a 50 or a 100, dare I say a 200. So this is a pretty weak resistance. But the fact that a weak resistance is holding as resistance is just expressive of current interest. So current interest is just getting off the ground, not just in curve. Obviously, curve charts up. But the point is, they just cut rates. Give it a couple weeks, give it a month or two, and we're really talking about like into Q4, which is October, November, and December. And we'll start to see what happens when quote unquote interest rate policy leads its way into relative currency valuations as well as long duration debt interest rates, because that's the investable portion of sovereign debt markets rather than like bank shit, which is the shorter duration. Japan back on 144 yen to the dollar. Interesting structure. 5 hours left for the weekly close, and we are below the 100 on the weekly. It looks like we're heading into yen appreciation zone. Have a continuation to the downside that is very much consistent with the DXY going down as well. Yen appreciating has a variety of effects in the global economic situation. Um, Across the board, there's plenty of things to talk about with regard to like Japan and China relationship. Obviously, stuff that goes on between Russia as the largest producer of commodities and exports, so consumable exports, energy exports, so on and so forth. But most importantly, is the directionality. We are in directionality reversal territory, expressed in all charts. Um, I mean, clearly not in like a Nasdaq or an S&P, but from the charts that matter, which is currency, bond yields, gold, energy prices. It's directionality reversal territory, which is consistent. They were raising rates, they stopped raising rates, and now they're lowering rates. Shit is going to start moving in the opposite direction. And directionality reversal in crypto markets means up rather than down for the first time in a couple of years. So that's, whoo, thank God. Lots to learn in hindsight. It's maybe a topic for another day. Anything else? And move down to 92. Move down 92, which is constructive. This is something that has clearly expressed trend reversal coming off the highs in March of 23, the banking collapse, where the United States banking system was on the trajectory to cascade and collapse everything. Get a close below the 200 on the weekly, not too constructive. What are the moving averages from a volatility indicator? I often say that, but what you want is the fresh lower lows, at least from a level perspective. I would weigh on this chart levels more than moving averages. Although it's interesting from a moving average standpoint that we are seeing a downward trending 100. Take longer for the 200 to downwardly trend, but a downwardly trending 100 at least indicates short-term reduction in bond market volatility, relatively short-term because that still is a 100-week moving average. On the monthly, 200's rolling over. Huh. You need to get below these moving averages. You get below these moving averages, you get below 77, 78, and you're in the 75 to 70 territory. That coinciding with the dollar below the 200 on the weekly, and that's your ultimate weird scenario for crypto markets. And that's really the heart of the bull market, as we can clearly see in a DXY chart. Convex finally back above 2. Frax is still lagging, buck 95. Like to see that push up a bit. I follow a lot of other stuff, but anywho, financial conditions, balance sheet down a little bit, whatever. Eventually, we'll see what the Fed's going to do with regard to excess debt issuance or the deficit spending, quote unquote, because a whole lot of issuance coming on the market from Treasury. And who's going to buy it? And we're going to see how kind of appetite the world has, what kind of adjustment to short duration versus long duration that Yellen will will institute as policy. But history says it's probably better to actually look at reserves from a. We'll probably see reserves bottomed out. I don't have the chart up, but if you look at bank reserves, we're probably at the critical level, and that's partially why Fed had to change their policy stance. Anywho, let's do some commentary. If you're on YouTube or X, please feel welcome to throw some comments. More than happy to talk about anything on your mind. Tapsy, sup, y'all? Irreverent, always blessed as always to be here. Hope everyone is well amidst the volatility. At least we're seeing volatility in a good direction for once. Soon, always a pleasure, my friend. Aiden, good morning. DA Advisor, good morning. Shabbat Shalom. Yes, indeed. It is Friday. Friday. I'm going to sleep well tomorrow. And hey, Noah, what are your thoughts on the subject of yield on Bitcoin in reference to the Michael Saylor? I like the way I always like the way he frames it because he's an engineer, and that's something I've done in my life. I call it modeling, and that's what it is. You model something in terms of something else to give you a different perspective on things. So when he always talked about like Bitcoin as a store of energy, that made sense from an engineering perspective, but you really need to understand energy. You need to understand, like, you'd be surprised what you could talk about in terms of currency, voltage, and resistance in economics. So it's modeling. It's not, it's not electricity. Bitcoin isn't electricity, but it's encapsulating energy to a degree, at least metaphorically, at least from a model standpoint. So when he talks about yields, that makes sense because there is basically a CAGR associated with Bitcoin, compound average growth rate. And if you extrapolate that and you account for that and you break that down into terms with regard to interest rate, great. So there is an interest rate. I've seen folks lately uh, talk about that in constructive ways. Arguably, with the X amount of capital, with that interest rate, Bitcoin is an excellent vehicle uh, based on economic trends with regard to global debt to serve yourself and your family financially well. If you have a modeled interest rate on Bitcoin, considerate CAGR and whatnot, at 30% per year, and you got $100,000, you can spend X amount. In theory, you got to account for rising consumer prices, and you want to consider something with regard to reinvestment. So not selling is akin to reinvestment. And so if you have a 30% rate of return and 100 grand, that's 30 grand a year. So let's say you spend of it, 15 grand accounts for reinvestment as well as potentially consumer price inflation. So you have that extra 15. So the complexity there is that's not adequate amount of capital to serve most people well. An extra 15 grand a year doesn't do much in the United States. And it also requires a relatively sophisticated understanding of financial matters and restraint on expenditure and quarantine of capital and just account management, accounting. And that's a hella complicated topic. So most people don't subscribe to it. Now I appreciate it because I've been neck deep in accounting and and legal matters of over the last years to better understand the world in which we exist. So that kind of story that Michael Saylor tells resonates very well with me, and I appreciate that. But something I talk about very specifically is you need X amount of capital to do things reasonably well. Listen, if you have 100 grand and you're in pick a foreign nation and an extra 15 grand a year, gradually increasing over time, dollar denominated, it's already complicated because you're in another country with another currency and you have to talk dollar denominated to make sense of things. So that works. 15 grand is probably life changing in how many countries? So that's quite a meaningful perspective. The problem is it's relative. It's relative to how much it costs and so on and so forth. And it's not the thing that's going to come back ferociously is the insane appetite for gambling and speculation on meme coins to turn $100 into $10 million and have no idea how to manage the resulting currency or the resulting gains more specifically. So anyhow, I like the way Michael talks, always did. I think there's risk also because he's vested interest, albeit not that his the risk is marginalized or diminished. It's not like over time it gets less and less risky. Frankly, the more and more he acquires and MicroStrategy acquires, the more increasing the risk gets. It's all about trust and certainty and determinism. He is not deterministically obligated to invalidate his thesis. So that's just the nature of humanity, and um, but but clearly he's supportive of the industry financially. Bitcoin price is partially where it's at because of him and MicroStrategy and the debt that MicroStrategy is issuing, um, amongst other things. I mean, look at Larry Fink and BlackRock. Oh my God, it's basically a cheerleader at this point, which is fascinating because of they cater to an increasingly mainstream population. So 2021 was a very non-mainstream population engaging with these markets, either highly sophisticated actors or relatively youthful um, persons just trying to figure out what the hell it all is. But it wasn't like, you know, Jane and Joe um, working at a factory and in their 401k, they select an option that has Bitcoin in the option because that's what like Fidelity is doing, where Bitcoin is a component of these managed portfolios. And I think that will be a trend that's increasing where Bitcoin just leaks its way into the portfolios of the majority because of the CAGR, compound average growth rate. It has a way of allowing persons' accounts to relatively significantly outperform. And that's just going to make it weirder and weirder as cycles go on. And that is something I want to be here for. And I want to see it firsthand. I just look forward to actually doing it the way I do it rather than the the blinders approach where it's like just dump it all into a 401k and hope they're going to do the best they can, the money managers. I, I want to be in control. I handle my own shit. So that's why we do it the way we do it. Anyway, bit of a digression, but I hope that answers your question. Arrow, good morning, sir. Sir, Joe present. Cal, been 3.5 years, bro. Yeah, how about that? We've been at this a long time. Well, 3.5 years, bear in mind, is like what, 2020, beginning of 2020. 2021 was insane. That was more so 2021. 2020 was just like It's literally like an explosion of activity. But most of it at the beginning was bullshit. Like it was just, you know, gem hunting on Uniswap or pool twos and the 5,000% interest rates, and people trying to figure out what the hell's going on because they've never seen interest rates before. They've never seen rates of return that pool twos presented, and they never handled or discussed the concepts of tokenomics and monetary policy and framing it in terms of what the hell central banks doing, because that's exactly what that tokenomics explosion in 2020 was literally like 1,000 years worth of central bank experimentation with monetary policy in 6 months, and then it clearly diminishing returns over the next year into 2021. But some very interesting systems came out of 2021, and that's where we are today. That is where we are today, ladies and gentlemen. The interesting shit that survived 2022 came out of 2021, and that makes it even more interesting. That is meaningful that it survived the deflationary collapse of this market. Very interesting. Hope that helps. Arrow, do you find it odd that one of the creators of Ethereum says it's not meant to be money? No. Okay, so there's what are the definite what are here's definitions. I'm not even gonna wait. Here's three words: money, currency, value. Not so easy, not so easy to define them. Okay? What is money? What is currency? And what is value? If you have something that has value, do you give a shit if it's labeled currency or do you give a shit if it's labeled money? What is the distinction between money and currency? All of those three things have distinct definitions. So what is semantics are overwhelmingly critical because the word money was used here. What is money? Money Money is a means of incentivizing labor, financing social civility, and rationing natural resources. So things need to be denominated in a currency to be an increasingly significant money because the money you need to be able to access rationed natural resources. Now, um, consumer staples, for instance, you can't go into a supermarket with Ethereum. In El Salvador, Bitcoin is a form of money. You can go into countless stores and spend and purchase. So that is probably a key component of what I would use to define a money. And so money maybe is broader than currency, and currency because you can't collateralize currency, but a money, which is what I define Bitcoin and Ethereum as, it's a collateralizable cash equivalent maybe. So cash, when I say cash, is probably currency. You can't collateralize cash. You can collateralize a money, and that is how I try and understand these words and try and define them. Um, where it's meant to be a money, and they'll agree too. You need Ethereum to pay for transaction fees to purchase block space. So it most certainly is a money with regard to engaging with this network. It's not a money in the same way that Bitcoin is, especially with regard to perception, social acceptance, and the overall narrative circulating in society. So it's not that kind of money. It's kind of like when I talk about inflation, I'm like, you got to talk about consumer prices or currency or crypto market inflation. Inflation isn't a term unto itself. So what money is dependent on what you're talking about. So maybe that's best said. What are the degrees of moneyness? What money like properties does something have? Because currency is kind of unambiguous. Currency is not really like something to talk about. It's like dollars a currency, yen's a currency, pounds are a currency. These are currencies. It's not really questionable. But actually, I think that helps a lot. Currencies aren't really questionable. It's kind of obvious. Money unto itself, like inflation, doesn't really mean much. It's like something has properties of money, degrees of moneyness. I think that helps clarify. it. Um, I'm sure an entire conversation with the one of the creators, uh, this would resonate. These points that I've just made. Hope that helps. Irreverent Nexus, good stuff. Good stuff. Cal, when Burr, what kind of Burr? You say they, most people be like, when is the Fed going to fire up the money printer? When Burr, what is Burr? Treasury has expressed that they are doing buybacks to smooth out the yield curve to try and fix the price of money. Right now, it's getting deep because I use the word money, because basically bonds are money, future money. So she's trying to fix the price of money with regard to duration. So Fed print to go burr is like that whole QE shit that we experienced where the Fed is just buying. They don't want to buy, and I think over the last 4 years they've structured facilities and processes such that they don't need to buy. I think they could do it better differently instead of it just landing on a balance sheet which the entire human race can inspect. I think that's what like Basel Endgame is. It's basically just forcing the banks to buy it by policy. So policy QE. So that maybe that's what Basel is and all its derivatives. So that's a type of burr, so to speak. What is burr? I would say probably the biggest burr is dollar depreciation because dollar depreciation increases the purchasing power of foreign currency, and there's much more foreign currency than dollars. So the biggest burr comes from dollar depreciation. Uh, Burr, from a creation standpoint, is probably bond market volatility. Once they get bond market volatility under control and they fix the price of money with regard to duration, there goes the Eurodollar printer. And what is a Eurodollar printer? What is the Eurodollar burr? That's basically respective of interest rates. And maybe so Japan's going to keep relatively low interest rates because their financial situation, whole whole monetary situation. So that means they're a creditor. If you could borrow at what 1/4% right now, if they somehow figure out how to bump it to a 0.5% without blowing up the world, that's still significantly cheaper than interest rates almost anywhere else. So the large actors play geopolitical arbitrage, which basically means why are you going to borrow in the U.S. if you could borrow at a 1/4% or a 0.5% in Japan if you think the yen is going to depreciate? Because if the yen is going to appreciate, probably don't want to borrow yen because then when you convert to dollars, you eventually have to pay back more expensive yen. So this is why relative currency valuations are so significant. And that's why yen appreciating is a complexity. So while the dollar depreciating fuels increased foreign currency prices, as foreign currencies appreciate, especially if you borrow it in a place like Japan, you now have to buy back increasingly expensive currency. All of this together affects flows, all these pressures in the system, all these knock on effects. And they're quite fascinating to try and wrap your head around. Ultimately, that's why I started the stream with this, like the two time frames I like the most, which is right now, because this is a snapshot into what the hell's going on right now, and the destination. And the path will always be forever treacherous, but the destination is clear as ever. And finally, for the first time in a while, right now, looks pretty nice. From a dollar level standpoint, close to 100. We pierced the 200 on the weekly, especially on the day of rate cuts, no less. But you need to see a nice weekly close below the 200. You start to see a weekly close closer to 100, and you're finally getting there. And we'll see what the hell the powers that be do with regard to yen pricing and see how they are able to manage or rather prevent a significant deleveraging from all that borrowed cheap yen that made its way into international investments, especially the United States. Hope that helps. I get a kick out of it when it's a relatively sophisticated answer to such a simple question because that's just real, and real is important. I know it's not a simple answer, but there's nothing simple about what's going on. Arrow, thoughts on when the rotation from fees to float rentals may happen? Yeah, yes, this, and now I'm remembering, and thank you for reminding. So, I mean, that comes from entrepreneurs, meaning wh- what's the fundamental thesis for, let's say, Curve, or even like Aura Balance or stuff like that, or Velodrome, Aerodrome, and Kingdom. It's literally entrepreneurs and using it as a B2B product to finance their liquidity needs and incentivize liquidity depth. So as capital starts to reinflate the pricing of these assets, that changes psychological conditions and incentives for in regard to opportunity. So as these prices appreciate, people are like, oh shit, we probably got to launch our project. Or oh shit, we're going to start a project. How are we going to have liquidity? What is liquidity? It's kind of like overtones of an IPO. When a bank takes a company public, they are required to literally seed liquidity with the brokerage houses. That's part of the process of going public. You literally can't do shit unless the brokerage houses have the capacity to facilitate trades, the liquidity providers. There's always someone on the other side of the trade. So that's this kind of like companies, crypto companies have a capacity to finance their own liquidity in crypto markets and not go through the bank, the gatekeeper, so on and so forth. All that policy and procedure, that shit process associated with an IPO that costs millions and millions of dollars. You need, look, you're spending millions and millions of dollars on lawyers and attorneys and whatnot just to IPO. Then you need money for liquidity. At least in crypto, you don't have to waste your time with the bullshit lawyers and attorneys, and you literally just retain that capital more efficiently for liquidity financing purposes. So this is that's such a cool way to look at it. And that's a big difference. That is a freedom to create a business. That's the spirit of entrepreneurship, and that's why it's so exciting to have exposure to those types of B2B products. So I would say it's a little bit later in the stage. You need to start to see two things. You just need to start to see price appreciation, which hopefully we see in our core investments. But then you also need to see development, and you want to see new projects. You need to see that boom that we always talk about is why would it not occur? A boom of development, a boom of entrepreneurs coming online with new products and services and new derivatives and the 10,000 stable coins because make a stable coin. Just got to make it. So it's permissionless to make a new business in these markets. And it's not relative to a nation state. It's a market of markets, accessible to all markets, but of no market. So that's where we are. Clearly, we're closer than we were 2 years ago. So I think the conditions are certainly favorable. Increasing currency prices around the world, more purchasing power leads to price goes up, leads to incentives, draws in the builders, and these types of assets that we like the Curve, Convex, Frax, and whatever, what have you, um, will benefit both from price appreciation just because of speculation, and also price appreciation because of their B2B products. My man. Also, I'm curious to what you think about needing collateral as part of your crypto portfolio or just having productive assets is enough. So, well, this is an age-old question because I see and appreciate and understand Bitcoin for what it is. And well, look what Michael Sarah's talking about, the rate of return, and look what a lot of folks talk about. And so it's meaningful, it's important. Does it mean you're going to underperform? Maybe. But that's potentially still something important to have, just like we talk about gold. It's the what if. What if something does happen differently? What if Bitcoin does do something that no one saw coming, except like, diehard Bitcoin maximalists, where it's like Bitcoin takes over the world. It's the last thing. I don't know. So that's why it's kind of significant to consider retaining exposure, even though there's potential for underperformance. I mean, an opportunity cost, the relative opportunity cost. But fortunately, it's a collateralizable money-like instrument, so you could have it and still have capital, working capital. So that is a consideration, albeit um, an asset on the books is an asset on the books, whether it's Bitcoin or some sort of other productive asset. All that matters is relative outperformance and productivity. And is it a good fiduciary choice to actually own that particular investment? We're here to make good decisions. That's the difference between 24 and 2020 and 21. 2020 and 21, we're trying to figure shit out. What does it all mean? But here in 24, we're here to make good, not just risk adjusted decisions, but good, prudent decisions, slow, methodical. That's all it takes. And then the rest is time. That's it. Hope that helps. Is there historical evidence for a big dip due to them finally cutting rates? Yes. Big buts. Ben Cohen talked about how last time they cut rates, Bitcoin rallied and then plummeted. There's a lot of buts. It's different this time for the reasons Luke Groman talks about. Total debt to GDP and total amount of deficit spending. So it's weird, and that is just something to always recognize. History rhymes; it doesn't repeat, so on and so forth. Everyone knows that shit. But it's a lot of things that indicate that it's different this time, and that could be very weird. First and foremost, gold prices. It's still going up. It's been at all-time high all day. Someone is bidding the shit out of gold. That's crazy. I mean, something structural. This chart indicates something structural in the system. Let's take off logarithmic because we were at in 2011, and it took us 9 years to get back to that price in 2011. So something structural has changed. You could almost put a line here like this and be like, failed breakout. They were able to control the system. Failed breakout. They were able to control the system. Failed breakout. They were able to control the system. And I'll zoom in on the three breakouts. And here's the fourth one. They've lost control. So that's what this chart indicates, that something is changing structurally in the system with regard to nation state behavior, with regard to the significance and meaning of money, so on and so forth. Something is changing significantly. So that's just a very important observation. My man. Crypto Tube, excited for tap testnet and successful mainnet deployment. Mac at the spring in the step. He always did, always does. And yesterday's announcement, I think we're really darn close. It's cool. You got tap on ARB, you're going to get exposure to testnet, and testnet's going to give you exposure to 50% off options. It's close, very close. And I think I am as well excited, realistic as always, but excited no less. I might be one of the first investors in tapioca. Probably the first half dozen at worst. Uh, just speculative. That is not a final statement. But I was one of the early investors. First round, first conversations, first everything. So I have a high opinion of what they've built, and I look forward to seeing its capacity as a fintech product. Very exciting indeed. Joel in the house, good morning, my friend. Raul, hello. What is Burr, the defining question of our recent decades, irreverent? Yeah, I hope I answered it best earlier. It's pretty decent, elaborate answer to, a couple of a four-letter acronym of sorts. Hope that helps. JPY, yes, the rumor was among Bitcoin maxis that Friday's Asian JPY close would help us know whether Bitcoin up more or BTC crab more. Not sure I vibe with that thesis, but it's interesting. I think it's myopic. there's many more components because if Bitcoin, if the yen appreciates too much, they have been the world's creditor with their 0% interest rates, much more so than the US. And therefore, increasing price of their currency, that's a whole carry trade conversation, causes leverage on wine and investment on wine. Because now, if the yen is going to continue to appreciate, that changes the investment thesis bigly for everyone. So, anyhow, Tape Pusher, what is the destination in a nutshell? The destination is as clear as ever. They have to refinance $10.8 trillion in 2024, and they're running, what, a $2.8 trillion budget deficit. You're talking about $13.6 trillion is going to come out of the Treasury in some form or another, bills, notes, bonds, treasuries, what have you. And that is a monumental historic number. Who buys it? If the world doesn't buy it, the Fed buys it. And if the Fed buys it, they're monetizing it. If the world buys it, it depends on where it ends up, if it's monetized or not. In any case, we know that the significance of any US debt instrument, notes, bills, bonds, treasuries, ends up as a form of collateral somewhere or another. And that means that money instrument that they're producing at the Treasury facilitates the creation of currency using credit. And the credit is used for what? Mostly, as Mike Howe talks about, to refinance existing debt and service existing debt. So it's literally all just this regurgitating cycle of refinancing debt obligations. And that's exactly what he talks about. And that makes the most sense to me out of a lot of conversations that I hear from a lot of people. So the destination is clear. Global currency supply must increase for global economics to continue to function, which means global debt supply will increase to facilitate the expansion of the global currency supply. And depending on interest rates, you'll see how fast the global currency supply increases due to the increase in global debt supply. Isn't that a weird one? Folks may need to rewind that one or two times. As debt increases, debt is used to print currency. Depending on interest rates, the lower the interest rates, the more currency that can be printed and have favorable terms from underwriting using that debt as collateral. Destination is as clear as ever. The whole system needs to expand. The whole question is, especially from a regulatory standpoint, where that inflation is trapped. Does that inflation get trapped in the financial economy? Does it get trapped in equities or crypto? Or does it seep into real estate and consumer prices? That's the question. I think no matter what, clearly crypto is a beneficiary of increased global currency supply, especially increased value of global currency supply. And that is what a depreciating dollar achieves. My man. Dystopian, good morning, Cap. Much pleasure. Myopic is a great word for it. Yeah, yep. A lot of the talking points of myopic in social media. Burr. Just yield and money and value and currency. And it's just a lot of myopic takes. And even a non-myopic take can still be myopic. Why? Because that's just the reality of language and semantics. You could always delve deeper into an argument. So that's just something I appreciate. I don't think there's an end to that rabbit hole of how deep you can delve into any argument. Shinzoabo. I think I got it. Have you ever thought about how all the people losing their jobs to AI and robotics in the next decade will be kept busy? Raoul Pal's conversations. So notice how I mentioned people. People that have these types of conversations that they're most interested in. And I usually reference the ones that I find most interesting because they not just fit my thesis, they fit the data on a daily basis and what's actually happening in the world. So they're actually describing something real that's occurring. So Raoul talks about this probably the most, like post 2030. There is no way, and including in my mind, not just from what I hear from Raoul, there is no way in hell we have any comprehension of what's going to occur into next decade. I saw Chipotle's bowl making machine. Um, and there's no one going to be in fast food. Nobody. Nobody's going to do anything in fast food. It's going to be a vending machine. You'll have a sitting there. It'll look exactly like a Wendy's, the same Wendy's, except it's all robotics. It's all a giant vending machine. You don't need people. The truck drives itself to the Wendy's. It pulls up. It docks like a damn shuttle on the space station. It ejects its payload into the equipment in the fast food restaurant. The fast food restaurant processes everything, throws its trash into bags, picked up by robotic garbage haulers. All automated. Everything is going to be automated. You know why? Because humans are a pain in the ass. Now, I say that being a human, and I say that knowing as a matter of fact that I am a pain in the ass. Humans are complicated. Now, what is the role of humans in a world that, what is, these are excellent, these are existential questions. What is purpose? What is meaning? Wha- These are great questions. Sir, just like I said with a lot of other topics, that destination is clear. It's written in the cards. We know the robots are coming. We know the AI is pretty crazy in its current form, and it's not even AGI. So it's got to be weird. Um, I have no idea. I know the changes. I know the displacements that will occur. No one in fast food, vending machines. Probably something similar with big box stores, Walmart's, Targets, Sam's Club, so on and so forth, BJ's. It's all just literally, you have the shelves, but you don't need humans to stock the shelves. So that changes the whole equation. Imagine documentation and, well, maybe government's still going to be as stupid as ever. The DMV comes to mind. I mean, why is that not like an automated process at this point? Oh my God, beyond me. I don't know. I don't know. But I think about it often, especially with my kids who are young. Tape pusher, destination, fiat buys less of everything. Well, that is part of the reality of increasing supply of fiat, but it's not the full equation. For instance, if there's an energy miracle, as Luke talks about, and energy prices come down significantly, fiat can appreciate, even though they're increasing the supply of currency. There is a variety of scenarios where the value of that currency can increase significantly. So that is something that the doomers don't accept or appreciate. That's exactly what happened between like 2011 and 2020. They were significantly increasing the supply of currency, yet consumer price inflation was basically nothing. Nobody complained about inflation between 2011 and 2019. Wasn't even on anyone's radar. No one talked about it. Yet the supply of currency was increasing. They were refinancing the debt every year. So that's whose conversation talked about that, the what changed. And I think the what changed was Mike Howe was talking about that. What changed was globalization. So if they were increasing the supply of currency, but you had the deflationary prices coming out of China because the manufacturing and tech was cheaper and cheaper, that was offsetting the relative valuations. So deflation increases the price of currency, the value of currency. And those still exist, even as gold still goes to 26, 23. Oh my God, this chart's insane. Um, so that's just something for folks to recognize. The deflation is always a possibility. That's part of the collapse that everyone fears. If the stock market's collapsing, you guys need to understand the value of the dollar is going through the roof. It is exploding higher, even though they printed what 40% of the currency since 2020. Yeah, if Nasdaq is crashing to 15 grand to 10 grand, you know what's happening to the value of the dollar? Okay. Just remember, It's not that whole social media shit that people talk about, like, oh, the dollar, it's evil, it's bad. Yes, but it's more. There's more to it. There's plenty of reasons the dollar could significantly go up in value. And not just relative to foreign currencies, relative to the goods and services that we buy on a daily basis. Consumables, consumer staples. Great question, Shinzo. If I were asked, I'd talk about how the price of human labor productivity needs to better line up. But if you measure on Bitcoin Standard, we've been broken for a while. Complicated, good points. Price of human labor, frankly, we have the demographic collapse, and that's why they let in so many folks over the border to try and compensate for the decreasing population of workers. And that's not just the US, it's everywhere. That's why everyone's complaining in Europe. It's everywhere. It's the whole planet. The Great Migration. That's probably what like 22 to 24 is. It's like literally the Great Migration. Anyhow, good points. Good points. Good stuff. Good stuff. Friday, September 20th. We're gonna wrap it up for the weekend. Everyone decompress, relax, watch the gold chart, watch the Bitcoin chart, enjoy the prices. Everything is it's finally comforting, and there's a little bit of sense of less anxiety that things are moving towards a destination, and we'll be the recipient of the inflation in the crypto markets that we've been seeking, that is commonly called the bull market. 12:37 p.m. on a Friday, September 20th. 141 people made it to the end of the stream. You all get party poppers and badges and awards for sticking with the captain and with the crypto markets for all these years. Most people didn't. You are a minority, and the majority don't succeed. It's only the minority. So you've already done something that is different than the majority. I wish you all a wonderful weekend. Stay rational. I will see you on the flip side on Monday. Peace.